Something just changed in XRP that matters more than it looks. Over the past 6 months, wallets holding more than 1 million XRP accumulated roughly 1.53 billion additional XRP, pushing large holders control above 74% of supply. While much of the market remains focused on short-term price action, investors are watching a very different signal. In this video, we're breaking down the data behind that accumulation, the institutional and regulatory development shaping the XRP narrative, the rise of tokenization, Ripple's expanding business model, and why some analysts believe the next phase of digital finance could look very different from what most people expect. Let's start with the number that deserves attention, ladies and gentlemen. More than 74% of XRP, the anointed one, is now controlled by wallets holding at least 1 million XRP. You got to let that sink in for a minute and marinate on that. That's not a price chart. That's ownership structure. And ownership structure often tells a very different story than market sentiment. Because while many retail investors have been reacting to volatility, large holders have been steadily increasing their positions. The question isn't whether accumulation's happening. The question is why. And that's where the story becomes much bigger than XRP itself. Because the same period has seen increasingly discussions around tokenization, digital asset regulation, institutional infrastructure, and the future movement of value across global financial networks. Now, this is what most people miss. Major financial transitions rarely begin with headlines. They begin with positioning. Capital tends to move before attention arrives. And understanding that distinction is critical if you're trying to understand what the market may be watching beneath the surface. You're enjoying breakdowns like this? Make sure to like and subscribe. Join the Wolf Pack. It helps the channel out a lot. Now, with that being said, let's continue. This next part is where it gets more important. Throughout financial history, major market transitions rarely begin with public enthusiasm. They typically begin quietly. Capital moves first. Attention follows later. The question isn't whether whales own XRP. The question is why accumulation continues, despite periods of weak sentiment. Social sentiment surrounding XRP recently dropped to levels that historically have often appeared near major turning points. Now, sentiment indicators aren't crystal balls, ladies and gentlemen, but they do reveal something important. Most investors focus on what happened yesterday. Large investors tend to focus on what could happen over the next 5 years. And that's where the conversation shifts from trading to infrastructure. Because increasingly, the XRP narrative isn't about speculation. It's about utility. Write that down and let that sink in. It's about financial plumbing. It's about systems. Prices reacting. Systems evolving. And that difference could define the next chapter, ladies and gentlemen. I want to go over the regulatory shift. See, for years, one obstacle overshadowed nearly every discussion around XRP. Regulatory uncertainty. Institutional investors don't deploy billions of dollars into assets operating in legal gray zones. They need clarity, rules, frameworks, predictability. Recent legal and regulatory developments has significantly improved the outlook for XRP compared to previous years. While legal interpretations continue evolving, many market participants view these developments as reducing uncertainty, potentially opening pathways for broader institutional participation. And that matters because regulation doesn't create demand. It enables demand. Think of regulation as the road. Institutions are the vehicles. Without the roads, the vehicles don't move. But here is where it gets interesting. See, the conversation is no longer just about XRP. It's increasingly about tokenization. Tokenization, the trillion-dollar opportunity many people are not paying attention to. Many industry leaders believe tokenization could become one of the largest financial transformation of the next decade. The basic idea is simple. Real-world assets, stocks, bonds, real estate, commodities, treasury products, all represented digitally on blockchain networks. See, supporters argue this could increase efficiency, improve settlement speeds, reduce costs, and unlock entirely new markets. Asher Berla has discussed how blockchain technology may enable products and opportunities that are difficult to imagine today. That may sound familiar because we've heard this story before. See, in the early 1990s, Very few people understood what the internet would become. Most observers viewed it as a niche technology. Interesting, useful perhaps, but hardly transformative. Then infrastructure improved. Connections became faster, adoptions increased, developers built applications, businesses emerged, entire industries appeared that nobody could have predicted. Search engines, social media, streaming, cloud computing. The internet didn't change the world overnight. The infrastructure came first, applications came later. And some analysts believe tokenization may follow a similar path, not because history repeats itself, but because infrastructure transitions often follow familiar patterns, ladies and gentlemen. See, there's a liquidity question. One of the biggest arguments made by XRP supporters revolves around liquidity. If trillions of dollars eventually move through tokenized systems, those systems require sufficient liquidity to function efficiently. See, this has led to some analysts suggesting that digital assets serving as liquidity layers could experience significant valuation increases if adoption scales substantially. Notice the key phrase, if adoption scales. This is where speculation and reality must remain separate, ladies and gentlemen. Write that down. Tokenization may grow dramatically, or it may grow more slowly than expected. Investors are watching carefully, but the broader point remains. If digital finance expands, liquidity becomes increasingly valuable, and valuable infrastructure tends to attract capital. Consider the invention of standardized shipping containers. Before containers, global trade was slow, expensive, and inefficient. Goods had to be loaded and unloaded manually. Every port operated differently. Then standardization arrived. Suddenly, goods moved faster, costs dropped, global trade exploded. Tokenization could be viewed similarly, not as the cargo itself, but as the infrastructure that allows assets to move more efficiently across financial systems. Again, it's an analogy, not a prediction, but it's useful framework for understanding why institutions are paying attention. Another major theme within the XRP community centers around supply and demand. The total supply is known. Demand, however, remains uncertain. If institution usage grows significantly while available supply remains constrained, market dynamics could change dramatically. David Schwartz and Brad Garlinghouse have frequently highlighted the importance of liquidity, utility, and market adoption. Supporters argue that increasing institutional participation could place upward pressure on valuation. Critics argue adoption expectations remain overly optimistic. The truth lies somewhere between the extremes, because markets rarely move in straight lines. But this is what most people miss. The debate isn't about today's demand, ladies and gentlemen. It's about future demand. Write that down. That's massive. I spend countless hours and days talking to sovereigns, family offices, and families about that exact principle and concept. You need to drill that into your wall. And that's where Ripple's business expansion becomes important. See, Ripple's evolving into financial infrastructure. For many years, people viewed Ripple and XRP as essentially the same thing. Increasingly, that's becoming an outdated perspective. Ripple has expanded into payments, treasury solutions, custody services, prime brokerage capabilities, institutional infrastructure, strategic investments, and broader fintech initiatives. The company's projected revenue growth has led some analysts to suggest Ripple is becoming a diversified financial technology provider rather than simply an XRP-focused organization. That's a meaningful distinction, ladies and gentlemen, because mature financial businesses generate value through services, not just asset appreciation. We go over this all the time on the phone with clientele. A lot of people always ask, is XRP exit liquidity to fuel Ripple's growth? We are not in that camp, and this is not financial advice. This information is just for entertainment, educational purposes, and just my own opinion, and anyone retains any capacity. See, the more infrastructure Ripple builds, the larger its role could become within the broader digital finance ecosystem. But the real shift came when Ripple started positioning itself for global scale. I want to talk about Africa, financial inclusion, and the next billion users. See, one area attracting increasing attention is financial inclusion. Hundreds of millions of people remain underserved by traditional banking systems. Again, they're in the middle of nowhere in places. This creates enormous opportunities for digital financial infrastructure. Ripple's strategic initiatives, including involvement with fintech firms operating in the emerging markets, reflect this broader vision. The goal isn't merely moving money faster, it's expanding access. And that brings us to one of the most fascinating developments outside of crypto itself. SpaceX, baby. SpaceX, Starlink, and global connectivity. See, SpaceX has become one of the most valuable companies in the world. A major reason is Starlink. Its mission is ambitious. Provide internet access virtually everywhere. Deserts, mountains, rural villages, remote oceans, places traditional infrastructure struggles to reach. Now imagine the implications. If connectivity becomes truly global, digital finance becomes accessible to billions of more people. Banking, payments, commerce, education, investment, all become easier to access. See, some futurists envision a world where AI-powered services, satellite connectivity, blockchain-based financial infrastructure work together to create entirely new economic opportunities. Whether that vision fully materializes remains to be seen, ladies and gentlemen, but the direction of travel is becoming increasingly clear. Digital infrastructure is expanding rapidly. See, a lot of the remote concessions, ladies and gentlemen, we develop, there's no internet. Most people would have to wait for a plane to fly over and it would beam down internet. If you didn't have a satellite phone, you had UNGATS. And these places, Papua New Guinea, Solomon Islands, a lot of places where you need resources, the concessions we develop, this is a game changer. It's a full-blown game changer. You're talking about communities that are cut off from the world and they're only fly-in, fly-out camps. They will have access now. This is beyond the game changer. So write that down. So to me, I spent hours talking about this as well. But I want you to think about the Transcontinental Railroad. See, when the Transcontinental Railroad connected the eastern and western United States in 1869, it did far more than move trains. It connected markets, communities, businesses, capital, entire regions became economically integrated. The railroad wasn't valuable because of steel tracks. It was valuable because of the economic activity those tracks enabled. Today's digital infrastructure may ultimately be judged the same way, not by the technology itself, but by the opportunities it creates. Again, I want you to think about the rise of international correspondent banking networks. See, banks establish relationships that allowed money to move across borders efficiently. The value itself wasn't a single bank. The value was the network. Some analysts compare modern blockchain liquidity systems to those historical networks. Different technology, similar objective, more value, move efficiently, reduce friction, expand access. Again, not a direct comparison, but an increasingly lens through which to view the evolution of financial infrastructure. Again, see, I want to talk about the macro catalyst, the Federal Reserve, and regulatory clarity. See, beyond XRP specific developments, broader macroeconomic forces remain crucial. Interest rate decisions, liquidity conditions, capital flows, risk appetite. These factors influence every financial market, not just crypto. At the same time, legislation aimed at providing clear rules for digital assets continue attracting attention. Many investors believe regulatory clarity could encourage additional institutional participation. Others remain cautious. See, both perspectives deserve consideration. Because adoption is rarely linear, progress often arrives in waves. But the overall direction appears increasingly focused on integration rather than exclusion. I want to talk about the danger of leverage. Before discussing future possibilities, an important warning. Leverage can be dangerous, ladies and gentlemen. It can cut you up like sushi, have you carried out in body bags for being over leveraged. It's bad. Margin calls no good. We don't like leverage here, especially in crypto markets. Recently, examples emerged of traders taking heavily leveraged positions to declining assets. This strategy can magnify gains, but can also magnify losses dramatically. Again, successful investing is often less about maximizing returns and more about surviving long enough to benefit from long-term trends. Risk management matters. Patience matters. Discipline matters. And no narrative, regardless of how compelling it eliminates risk. I go over all the time that your position size has got to be small enough to be cut, carry, add to. Again, you have to be able to outlast the market. See, the newbie thinks the more they risk, the faster they get rich. And you will not be Gucci. You will be cut up like sushi. This is not how you get that Gucci conviction or Gucci clarity. This is how you get cut up like sushi. You don't do that. Trading and investing is an occupation. It's a profession. You will do this day in, day out. It's about risk control. We're not there for the market, ladies and gentlemen. The market's there for us. Remember that. That's a crazy thing, but one of the first things I was taught before the Mercantile Exchange. You take anything from this one video before we get into this epic rant, you got to understand these rules of the road. If not, the market, and you violate these rules, will just wash you out. See, Bitcoin, gold, and the bigger debate is happening right now. The debate between Bitcoin supporters and gold advocates continue. We don't take any sides in this, ladies and gentlemen. You got few voices are more recognizable in the discussion than Peter Schiff. His skepticism towards Bitcoin has become legendary. Yet the debate itself highlights something very important. Both assets emerge from concerns about monetary systems. Both attract investors seeking alternatives. Both experience volatility. The difference is maturity. Gold has thousands of years of history. Bitcoin is still relatively young. That doesn't invalidate either access or asset. You want access to both assets. It simply means investors evaluate them through different lenses. And perhaps the more important takeaway is this: innovation doesn't require replacement. Multiple asset classes can coexist, ladies and gentlemen. Always remember that. As financial mercenaries, I go over this all the time. We want movement. We don't care about the narrative. We want movement. That's all that matters. I don't like this coin. He's a maxi for this, blah, 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 blah. If it makes dollars, it makes sense, ladies and gentlemen. Remember that. Write that down. So where does all this leave XRP, the anointed one? The accumulation data is notable. The institutional narrative is growing. The tokenization opportunity is expanding. Regulatory clarity appears stronger than it was several years ago. Ripple continues evolving beyond its original identity, and global digital infrastructure keeps advancing. Now, does that guarantee massive price appreciation? No. Nothing in markets is guaranteed. I tell you, the only thing that's guaranteed in life is death and taxes, ladies and gentlemen. But it does suggest that the conversation is becoming much larger than short-term price movements. Because short-term noise, long-term structure. Prices react and systems evolving. I always tell you to pay attention to what's quiet, because if you're paying attention to what's quiet, you're following your plan, your recce, your special sauce. Because what you're paying attention to is quiet one day becomes headline news sooner than you think. And investors who understand that distinction may be better positioned to recognize where financial markets are heading. Ladies and gentlemen, if you enjoyed this breakdown, make sure to subscribe to the Crypto Republic. Turn on notifications. Join our community for more deep dives into crypto, macroeconomic, institutional finance, and the technologies reshaping the global economy. I love you all. Thank you for watching. We will see you in the next video, ladies and gentlemen. I want to welcome all the new members of our Patreon, the Crypto Public Desk Monthly, all the new members of the membership channel. Hope everyone is having a fantastic day. Super, super psyched for our first Zoom call and meeting for all the members of the Crypto Public Desk Monthly. We're happening Saturday afternoon, either 2 or 2:30. Be on the lookout for everybody in the Patreon. We'll get a access link and code to get in. I want everyone here to fully understand something right now, okay? Fully understand this. None of this is financial advice. This is just my own opinion, and it retains myself and our organization any capacity, not financial advice. The gravity of XRP holders with 1 million coins now own 74% of the supply is massive, ladies and gentlemen. So you got wallets holding 1 million, control 74.1% of this total supply, okay? And according to sentiment, after adding 1.53 billion coins over the past 6 months. So they kept accumulating these whale wallets straight through the crashes, buying while smallholders sold into the Iran war sell-off that drove XRP to its lows for the year. And that split goes back to mid-2024. Ladies and gentlemen, this is no different than when people, and in our industry, in the mining and refining industry, again, who buy hectares of land and the rights to geological land and concessions all over the world. Because if you control the land, depending on what country you're in, some countries you can own the top, but you can't own what's below it. This is what it's about. They're cornering the market now. They're cornering. Ladies and gentlemen, if you want to learn how to trade, if you want to learn how to invest, come and join the Crypto Public Desk Monthly. One good tip from the pits can easily pay for your entire year subscription. So if you're looking for the deeper macro research and you want to learn how to take advantage of all of this, come and join almost 600 active traders and investors inside the Patreon, the Crypto Public Desk Monthly. Doesn't matter where you are in your journey, ladies and gentlemen, because nobody said this would be easy. People say this would be worth it. I go over things here all the time of what I'm paying attention to, and inside there, we go over how to take advantage of. One of the other bigger things that we're paying attention to right now is Russia's silver strategy. Everyone's asking the wrong question. So if you look at the markets right now, the DXY is spiking to almost 101. As the dollar, King Green dollar, gets stronger, it crushes all other assets. I told you in the previous video, you just want one psychotic theme going through the markets. You only want the psychotic theme about what the Fed will do. Again, the whole Iran situation was always going to come to an end. The kinetic action will never end. It was always going to come to a situation. Again, it did until 60 days or someone violates that. We're more concerned about what the people inside that country are going to say when the internet gets turned on and they see the wreckage, what happened to their country. But again, oil will start flowing out of it. If you look at oil at the time of this recording, oil is around $75 to $76. The Dow is just rip your face off. The NASDAQ up 735 points. What does that tell you, ladies and gentlemen? But while gold and silver getting crushed. I have told you time and time again, we are bearish short-term the metals. I keep telling you, I love constant copper. You're taking, I can't believe I give this away for free. You're writing this stuff down. You're so far ahead. How do you not love knowing what's going to happen before it happens? If you're watching this channel and you make it to this part to enjoy the candy of the Italian ices, okay? Ladies and gentlemen, this is all I do. We're financial mercenaries. We're the Remora. We swim underneath the apex predator, and we take advantage of the free meal. I tell you all the time, we're the wolf pack. The wolf's not the mightiest animal in the jungle, but do you see it doing tricks at the circus? No. Death by 1,000 tweets. So I tell you right now, you're not trying to catch a falling knife. You're allocating while the time is available, not financial advice, because when the rip your face off rally begins and Operation Printed to Win it begins, people are going to look back at this time period no different than if we were on an airplane in turbulence on a family vacation. That's why I tell you, stop telling people what you're doing. The same way in a plane, if you lose pressure, cabin pressure, you got to put your mask on first. Take care of yourself first. Think. Again, euro's getting crushed. As the dollar strengthens, anything that doesn't offer any form of yield or alpha gets whacked. That's not going to change how the world is going. It's not. See, look, there's a story making rounds right now in the precious metal circles, okay? The story goes something like this, right? Russia's preparing to use silver for international trade settlement. And if that were true, it could be one of the biggest monetary developments in decades. Because the moment a major sovereign nation starts settling trade in silver, you've moved beyond investing. Again, we go over, you've moved into monetary history. I go over all the time about what happens to metals when it's put on critical lists. I told you what happened with this. These are free moves. If you understand what happens in markets, these free tidbits, you just knock it out of the park. Please. The market sometime is like the dry season in the Serengeti. Fishes become cannibalistic because there's not enough oxygen in the water. They eat each other. Again, I could care less about a parade, about who wins basketball. Does that put money in my pocket? No, I don't care. I don't care. Those people are not paying your rent. They're not paying your mortgage. They don't pay anything for you, so who cares? My point exactly. You've moved into a completely different game. But after digging through available evidence, government budget documents, financial reports, reserve disclosures, and the reporting that actually started the discussion, I think almost everyone's focused on the wrong headlines with Russia. And what Russia's actually doing may be even more interesting. There's a massive difference between a country using silver for trade settlement and a country deciding silver belongs to strategic reserves. Most people don't understand that distinction. The market went down today. The market went down today. The candles are red. Ah, you made a video. The candles are red. Ah, I could care less. Throw the haterade on here right now, because these are the buying opportunities that come, and nobody wants to be involved because they listen to some schmuck say that this is going to go, woo, no, woo. You're in this for your family's future. Follow your own plan. That's why most people don't understand any distinction in finance. It's the distinctions that matter. It's following a plan. So let me go over some facts with this, right? Write this down. Russia has publicly indicated it intends to increase holdings of silver alongside gold, platinum, palladium within its state reserve structure. That part is not speculation. That part is documented. The precious metals are being categorized as highly liquid reserve assets. You got to write this down, ladies and gentlemen. This is one of the reasons, as far as we're concerned, why XRP is being hoarded. So if you made it to this point, you're getting that candy, baby. Now stop with me for a second. Highly liquid reserve assets. Think about the language carefully. Governments don't accidentally use the words like that. That's why when the United States classifies metals like that, we're preparing to capture moves that most people have no understanding about, because we pay attention to these things. Reserve managers don't wake up one morning and say, you know what would be fun, Charlie? Let's add billions of rubles worth of silver. You like that, Mr. Jones? What do you think? Reserve assets have a purpose. They exist to preserve value. They provide liquidity. They support financial stability. They strengthen balance sheets. And most importantly, ladies and gentlemen, they sit at the highest levels of sovereign financial planning. Think about this. Now compare that with trade settlement. Drop in the comments, what do you think about this, right? Because remember, I went over what happens when palladium's dropping, because palladium's used in combustion engines. You can see the difference of what happens if you understand this stuff, these financial factoids. That's like watching paint dry on the wall. But understanding this is how you make your bank account and trading account go higher. This is why we're retained by the people that retain us. Now compare, right? Trade settlement is an entirely different function, ladies and gentlemen. Trade settlement is how payments actually move between counterparties. It's how oil gets paid for. It's how commodities get paid for. It's how international invoices get settled. One's a storage of value. The other is a movement of value. They're not the same thing. Write this down. There's no publicly available evidence that Russia has officially adopted silver for trade settlement. None. Niente. They're not past go and collect $200. No central bank announcement. No ministry declaration. No state banking framework. See, nobody's even talking about this subject, but to us, this is leading us, follow the yellow brick road, baby. No document settlement mechanism. No brick silver payment infrastructure. Remember with the unit, half gold, half country's currency. No publicly announced silver-backed trade network. That matters because in financial markets, speculation often runs far ahead of policy. People hear one thing, and unfortunately, they immediately assume the next 5 steps. Don't do that. That's how you get cut up like sushi, and you will not be Gucci. You will not have Gucci conviction clarity. You will be cut up like sushi. It's not analysis. That's storytelling, and the job is to separate the two. Now, here's where things become interesting. Because if you're willing to slow down and think like a reserve manager, think like a reserve manager, because we have to. You're talking to one right now. The silver story becomes much bigger. Ask yourself a simple question. Why would a sovereign nation want silver at all? Why did India tell people you could start monetizing your silver? Russia already owns enormous quantities of gold. Russia has more metal in the ground than anyone on the planet. Okay? Anyone in the mining and refining industry knows this. Platinum, palladium, forget about it. The Governor Group, forget about it. Gold has thousands of years of monetary history. Gold is universally recognized. Gold is already held by central banks. Gold already functions as a reserve asset. So why is silver? That's the question nobody seems to be asking. And when we start looking at the numbers, things become fascinating. The global above-ground silver market is dramatically smaller than most people realize. Annual mine production generally runs around 800 to 900 million ounces. Industrial demand has exploded over recent years, ladies and gentlemen. We get phone calls every day in our offices in South America for silver. We just can't get it for them. Solar demand continues growing. Electronic demand remains strong. Defense applications continue expanding. Silver is simultaneously a monetary metal and industrial metal now. The combination is unique. Gold is primary monetary. Copper is primary industrial. I love constant copper. I told you copper is going to keep going up. I told you. Silver sits right in the middle, which means sovereign accumulation has the potential to affect markets that is already under pressure for industrial demand. So if you look at Russia's broader strategy over the past decade, has been remarkably consistent. Reduce dependency, increase optionality, diversify exposure, build alternatives. We've seen it with reserve accumulation. We've seen it with gold purchases. We've seen it with local currency settlement agreements. We've seen it with alternative payment systems. We've seen it repeatedly. So whether you agree with the strategy or not, the strategy itself is obvious. And viewed through that lens, silver begins making a lot more sense, ladies and gentlemen. Not as a trade settlement asset, at least not yet, but as another layer of sovereign optionality, another reserve component, another liquid asset, another form of wealth outside the traditional dollar system. And here's where investors should pay close attention to, not financial advice, just my own opinion in any capacity. Because markets rarely wait for official announcements. Major price probabilities, not certainties. Let's imagine a scenario, because markets price probabilities always. Purely hypothetical, no claim, no prediction, just a thought experiment. We'll revisit this. Suppose a sovereign nation accumulates silver for reserve purposes. Then over time, that reserve asset becomes accepted collateral. Then the collateral becomes repo eligible. Then that collateral becomes integrated into financial infrastructure. I'm trying to take the PhD out of PhD, everybody. And eventually it gains a settlement role. Notice what happened? Each step builds on the previous step. Each step would represent a gradual monetary evolution, not a sudden overnight revolution. The important thing is that we are nowhere near confirmation of these later stages. But once a reserve asset enters the conversation, the door opens to future possibilities. And sophisticated investors understand the difference between what exists today and what could exist tomorrow. Think about what I just said. Think about this. The market's constantly attempting to price that gap. This is why reserve status matters, because reserve status changes perception. Perception changes treatment. Treatment changes utility. Utility changes valuation. And again, not a prediction, just understanding how monetary assets evolve over time. Now, here's the part that I think everybody that what deserves the most attention, everybody. See, everybody's obsessing over silver. But what if the story isn't actually the main story? What if silver isn't the main story? Think about this a second. What if silver is just a clue, a breadcrumb to follow? Because what if a country is willing to classify silver as a strategic liquid reserve asset? What does that tell us about gold? Think about this. Gold already possesses monetary characteristics that silver is only beginning to reclaim in the minds of policymakers. Gold is already sitting inside central bank vaults. Gold is already recognized internationally. Gold is already functioning as a reserve asset. Gold is already moving into discussions surrounding settlement mechanisms in various parts of the world. So if policymakers are now expanding the reserve conversation to include silver, then perhaps the biggest takeaway is not silver's future. Perhaps the biggest takeaway is confirmation of gold's growing importance. That's the question that has my attention. And I'm spending time on the phone going over this with everybody. Now, whether silver settles straight tomorrow, but whether sovereign behavior continues validating precious metals as strategic reserve assets. Because actions speak louder than headlines, ladies and gentlemen. Reserve managers don't care about social media narratives. They don't care about YouTube thumbnails. They don't care about viral posts. They care about liquidity. They care about stability. They care about preserving national purchasing power. And when those people start accumulating assets, I pay attention. Not because they're always right, but because they're operating on a level of information and planning that most participants never see. They don't pay attention to this. So where does this leave us? The facts are actually very clear. Russia is increasing silver holdings. Russia considers silver part of highly liquid reserve framework. Russia is placing silver alongside other strategic precious metals. Those points are supported. What is not supported is the claim that silver is currently being used for trade settlement. That leap has not been demonstrated. And until evidence appears, it remains speculation. And don't make the mistake of dismissing that reserve story, ladies and gentlemen, because reserve decisions often matter far more than people realize. The world doesn't wake up one morning and suddenly adopt a new monetary system. It doesn't do that. Change happens incrementally. One reserve decision, one policy adjustment, one balance sheet change at a time. And sometimes the most important developments are the ones hiding behind the least exciting headlines, like watching paint dry on the wall. I tell you to pay attention to what's quiet. Everyone wants to know if silver is settling trade. I'm more interested in why sovereigns increasingly want to own it in the first place. That question may tell us much more about where the monetary system is heading and why. Ladies and gentlemen, if you want to understand how we're going to take advantage about everything I just said, and you want to learn how to trade, and you want to learn how to invest, come and join the Crypto Public Desk monthly. One tip from the pits can pay for your entire year subscription. You're looking for that deeper macro research? Here in these videos, I tell you what we're watching and why. inside the Crypto Public Desk monthly, we go over price points, levels, stop losses, everything, and the logic behind it, ladies and gentlemen. Come and join over 600 active traders, investors who are taking their own financial destinies into their own hands. None of this is financial advice, ladies and gentlemen. This content is for educational, entertainment, and informational purposes only. Always do your own research before making any investment decisions. Always. Never invest based on a YouTube video. Ladies and gentlemen, I love you all. Understand what I just said about XRP. And if you're still at the end, you are an OG in the wolf pack, and you should be inside the Patreon. That's why XRP is the anointed one. If that many wallets are controlled now by whales, it is no different than a land grab all over the world for future resources. I've been going over this for months. We're financial mercenaries. I'm not a crypto influencer. We don't use Twitter. I don't tweet. I'm not a bird. We don't use any other form of social media. We're just trying to give back because you make a living by what you make, a life by what you give to other people. I tell you all the time about ICP, baby, the savior. One day ICP is going to have a rip your face off rally, and it's never going to come back or turn around because it's a pure AI play. Again, most people are sleeping on this. I harp on this all the time. These coins don't lose their value because they decrease in what the open market's willing to pay you for it or sell it for. They don't lose what they do. Understand that. Know what you hold. That's why we love HBAR, XRP, ICP. Ladies and gentlemen, I've been going over for weeks about XRP building this whole ecosystem. Ripple just bought in with another major payment system in Africa. Massive. They're just intertwining it everywhere. But the whole situation, what I went over right here in this video with Starlink, ladies and gentlemen, if you've ever been in remote areas working fly-in, fly-out camps, mining camps, concessions in the middle of nowhere, you only get the internet if a plane flies above you now and then. This changes everything. So what do you think is going to happen with banking now that they get internet everywhere? They're not going to have to go into a bank. Their bank's going to be their phone. What do you think they're going to use? XRP, agentic economy. It's coming. The fact that this is being hoarded should tell you all you need to know. Again, ladies and gentlemen, I love you all. I'll see you on the front lines. Have a blessed evening.